Hello, good morning. Welcome to Churchill Tax Advisors Tax Update. Today's Monday, the 5th of August, and today we will talk about several cases. But before we go on to that, I wanted to talk about Code of Practice 9 tax investigations because we've had quite a few recently. In fact, in the last week, we've had 3 Code of Practice 9 investigations. And for all of them, the people who received them, they did not know what these were. So it's very important that we educate the seriousness of these investigations. First of all, Code of Practice 9 is a fairly serious investigation if HMRC is suspecting somebody of tax fraud and they have reasons to believe, or they have third-party information, or they've initially started an tax investigation and subsequently found that there are some serious or fundamental errors in the tax return, or the person has been committing tax fraud, they will start a Code of Practice 9 investigation. The second name for this investigation is Contractual Disclosure Facility. Now, the reason it's called Contractual Disclosure Facility, or CDF, is because under this investigation, HMRC will approach somebody, a taxpayer, and say to them, we know or we have reasons to believe that you have been involved in tax fraud, and however, we will give you the opportunity to come forward and tell us everything you've done wrong and pay the tax. And if you do that, you will have immunity from prosecution. Now, a lot of people don't appreciate that. A lot of people, because generally under the COP 9 investigation, Code of Practice 9 investigations, people are given 2 options. One is to either to accept that they have been involved in tax fraud and to pay up. Second option is to reject it completely. If you reject it, you lose your immunity from prosecution, and HMRC can start a criminal investigation. If you do accept it, but you don't tell HMRC everything, that means they can you lose your immunity from prosecution, and you can end up in prison. Very, very important, and it's unlike any other cases. Code of Practice 9 can escalate to prosecution, and people go to prison. It takes a long time for HMRC to initiate a Code of Practice 9 investigation. A lot of accountants are not familiar with the technicalities behind the Code of Practice 9 investigations, and they should always seek specialist advice. Now, the first step is either to accept or reject, which I've just explained just now. The second step is to put together an outline disclosure, which goes over a couple of pages. You do not have to provide any numbers in the disclosure, but to say to HMRC, yes, I've been involved in tax fraud, or I've deliberately done something wrong, and I will be making a full disclosure with the assistance of my advisors. That's very, very important that we get that correct. The second part is, if HMRC then accept that outline disclosure, and HMRC will take maybe 6 to 8 weeks to accept. They can then come back and propose a meeting. During the meeting, the client or the taxpayer is usually present. They don't have to be present. That's important, but they're present voluntarily, but it helps with the investigation. The meeting then goes on for about 2 to 3 hours. HMRC come with a long list of questions, but it's always best that they are represented by a specialist who can guide the meeting, who can steer the meeting in the right direction. And then at that meeting, a plan is set in terms of what work will be done by the advisors, the taxpayer, and HMRC, and what evidence and what documents need to be provided. A timeline is set, and then we have regular progress meetings, which allows to see how the case is developing and when the final report can be delivered to HMRC. So it's very, very important that we are familiar with the Code of Practice 9 investigations. I will now move on to some of the recent tax cases that have been announced. One of them was Kickabout Productions. This was announced in the last 2 weeks. Last week, it involved IR35 issues again, and HMRC and IR35, and especially the people working for the public companies, public sector, BBC, etc., working through a limited company. This has become quite a common phenomenon. Now, in this case, the person involved was performing different services through his limited company. He wasn't entitled to pensions. He wasn't entitled to maternity, paternity pay. There was no sick pay. However, HMRC claimed that he was an employee, and because there was a mutuality of obligation, but the taxpayer argued that no, they had enough control over their work. They did not require supervision. They could control their own work. So the tribunal considered all the arguments and ultimately decided that there wasn't enough mutuality of obligation between the two parties, and that the taxpayer could potentially command his own work. And that led to the IR35 not being applied by or being disapplied by the tribunal. The next case is Gardason, where the VAT position was challenged by HMRC on the sale of electronic planners. HMRC contested that the VAT should be charged on these planners being sold. This was through online Amazon shop, whereas the taxpayer said no, these are zero rated because these are educational products. They went to the court, and in the court the judge decided that the book, the planner book, is ultimately educational, same as you would be teaching a GCSE student on how to set up your day and how to work around your day. It's nothing more than an educational product, and therefore it was treated as a zero rated. That potentially means that the person who was making these supplies, the seller, his profits have suddenly gone up by 20%, which is quite amazing. Now, the next case is that for Tower Resources PLC. In this one, there was a holding company, and it had subsidiaries in African countries, oil extracting companies, and it provided services to those oil extracting companies. But there was no such invoice being raised. Therefore, HMRC contested that this Tower Holdings PLC cannot claim an input VAT. That matter went to the court, and the court decided that although there were no invoices being raised by the holding company to its subsidiaries in Africa, there was still a consideration because the subsidiaries in Africa owed the holding company a lot of intercompany loans and monies, and it is only by the holding company offering its services and advisory services to the subsidiaries, they were able to repay the loans that were due to the holding company, and there was some form of consideration involved. That in fact resulted in the holding company being able to reclaim its input VAT. The next case is that of Newman Fruit Farms Limited, where there was a trading company buying and selling fruit. The company became quite profitable. It had surplus reserves, so they didn't. They took advice and invested in a company, made a loan to a property development company, in the hope that they will make some better use of the monies that they have available. Now, what happened in this case was the property development company went bust, and this Newman Fruit Farms Limited lost its money. They then took the advisors who advised them to invest in this property development company to court. They also took the borrower to court to try to recover their monies. However, they were not successful. So then they tried to recover the VAT on this, and this is where the issue was, that the VAT, HMRC denied input VAT claim against Newman Fruit Farms on the basis that this did not relate to the main activity, and the activity that it did relate to, which was making the loan to the property development company, was an exempt supply, and because it related to an exempt supply, there was no possibility of claiming input VAT on an exempt supply. The matter went to the tribunal. Ultimately, the judge agreed that this loan, all this input VAT that was spent related to an exempt supply of making loans, which is generally exempt, and therefore that's why the banks cannot claim their input VAT on whatever their costs are, and therefore this cost cannot be recovered. Excellent. Well, if you have any questions in relation to any of what's been discussed in today's briefing, please get in contact with us on 0207 998 1834. If you do like our weekly updates, please do like us or like it on the YouTube channel, and we shall see you next week. Thank you.